how do you assess the impact of the sanctions that we've had overnight from various actors in this story?
They look to be in line with what the US was so helpfully flagging to everybody, and so good on the intelligence and so helpful in terms of what was likely to come. So the scenario analysis we did in January said this cuts growth from what would have been 3% at this oil price under the soft sanctions that were unveiled on Monday and Tuesday to 1%. So the Russian economy, we think, still grows, but it grows really weakly. And that's going to continue to be the case probably for many years to come, given how lengthy these sanctions are going to be in place.
The sanctions obviously avoided involving oil and gas or wheat at this stage. We also saw a notable rejection in Europe of shutting down access to the SWIFT system. Do you think that we might see those included in a further round at some stage, or would you guess this is it?
No, and I think there is going to be the threat of more sanctions to come. I think the US has reacted very quickly, but they had a sense that this was coming. They were warning us this was coming, but I do think we might well see more sanctions. In terms of the hard commodity story, in terms of oil, in terms of gas, in terms of food, no, the Americans are taking the same view that Putin's taking. That people still want those Russian commodities and they're still going to buy those Russian commodities. So this is a way of penalizing long-term Russian growth, but without causing so much damage to the rest of the world. It's the calculation Putin was making all along. Now, I don't think many people outside of the Kremlin would say this was worth it, but that's the situation we're in at the moment, unfortunately.
Charlie, very good to see you back on the channel this morning. In terms of the medium term, though, sanctions don't work in the very short term. We know that. We've seen that with various regimes around the world, but they can work over a longer term period as well. Do you think these sanctions are actually something that was going to create a completely different economic structure for Russia? Because let's face it as well, if they can't over the medium to longer term sell their gas to Europe, and there is plenty of gas out there, by the way, whether it's in the Eastern Mediterranean, whether it's in the Middle East, whether it's coming from North America as well, is this going to create a change that has been long been talked about in the Russian economy?
Yeah. I mean, on the sanctions point, you're absolutely right. I've just got this book in front of me by Andrea Kendall-Taylor, who was, for a while, Biden's nominee to be on the National Security Council as the senior Russia Central Asia resident. And she's saying back in 2016, looking at the evidence, sanctions don't work unless you go the whole hog and sanction oil and gas. And we put out that analysis, in fact, in 2014, when we wondered if the West would go that far. They would sanction Russian oil and gas. They didn't. It looks very unlikely that they will. For Russia, it does leave it looking more like a raw material exporter for China. For the West, we're back at the same questions I was asking in March 2014, 4 days after the Crimea referendum, when Russia's saying to Ukraine, we want you to be a federal country, we want you to be a neutral country, and we want you to sign over Crimea. And I think actually that's exactly what Putin still wants. And that's what he's going to carry on attacking Ukraine until he gets. And then I suspect his troops, by the way, will leave. I think this is Georgia 2008 again. It's not going to take 5 days, unfortunately. And it's certainly not going to be as low in terms of the cost of life. But I think that's what Putin's thinking, is that he's going to leave. And if Ukraine ever goes back on what it has to agree to promise in the coming weeks and months, they'll invade again. So that's the situation from their perspective. In terms of the sanctions, yes, it leaves Russia as this raw material exporter, and I think Europe should be diversifying its energy dependency on Russia, which is what I wrote in 2014. And I said it was going to take 5 to 10 years to really make a shift in European dependency on Russia. In fact, very little was done. The carbon taxing could be the way that gradually changes Europe's dependency on Russia. Imposing these carbon taxes on Russian oil and gas exports. And I suspect that is the direction we're going in over the next few years, but there's not going to be a sudden shift. And meanwhile, Russia, providing it still runs a current account surplus, and we think the ruble will stay as weak as necessary. to retain that current account surplus. Russia will still have savings to invest in its own economy to make some modest improvements in its technological ability. But it's going to be it's not going to be as good as it was.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.